The anxiety this week seems to be broader about what's happening with the real economy in China, right? Which is why you're seeing this huge hit in the commodity space as well. If you have Chinese economic growth decelerating faster because of problems with Evergrande, crackdowns in other sectors as well, how much can Asian consumption really hold up the ground if China worsens?
Yes, thank you for having me. I think China is still very important to the overall picture of the Asian consumption, so let's start with that. And if you were to look at some of the recent data on why the weakness in consumption is coming through in China, part of that is COVID related. And as we know, China has a zero tolerance policy with regard to COVID. So with the wave of surge in COVID cases that we have seen in China, we have seen mini lockdowns happening and mass testing happening, and that has affected consumption activity as well as economic activity to a certain extent. As a result of that, the consumption in China is pretty weak. On top of that, we are also seeing some knock-on impacts with regard to the fear surrounding common prosperity and what that actually means to premiumization in China. And our view is that we think that, over the long term, that would actually means the outcome of the common prosperity would actually mean that it will expand the middle class in China, and therefore the consumption in China will still be very much intact for long-term structural growth. And that should hold up over the long term. For the rest of Asia, I think as we start to see vaccination pace picks up, hopefully economic activity returns and consumption should resume. So when you put that all together, overall, as we move towards the end of the year and into next year, we see a pretty optimistic picture for consumption in Asia.
Okay. In the meantime, though, the short-term problems right now takes us to our question of the day. How long will Evergrande roll assets for, given that we really haven't heard anything from Beijing as of yet on anything concrete to resolve this crisis, right?
Yes, that's right. And I think all eyes are waiting for that, and that's why there's so much fear in the market at the moment. And our view is that that there should be knock-on impacts from what's happening to Evergrande, and that's really because it will impact some of the parts of the banking sector, it will impact some part of the home appliances sector, it will impact some part of the construction sector. But again, we think there will be knock-on impact, but the bottom line that we think is that there is quite unlikely to be a systematic risk, and that's really because this has been very much induced by the tightening path in the property sector that China has been on over the course of last year. So China itself is very aware of this risk and is watching this very closely. So I think it's a matter of when the Chinese government steps in, but that's a pretty tricky call. But from a fundamental perspective, Evergrande is about 3 to 4% of the overall Chinese property market in what is a very fragmented market. And what this means, again, over the long term, it should favor players that are having a low leverage balance sheet, good quality assets, and they will help to consolidate sector in the long term. So I think we are more positive in the long term, but then in the short term, it's going to be a bit of a volatility, but we don't think it's going to be a systematic risk.
What kind of analysis and approach are you taking to try and sift through the regulatory uncertainty and make your stock picks in China?
Yeah, I think what we are seeing right now is that there is a broad sell-off and indiscriminate sell-off across many sectors. And therefore, actually, we feel that the best way is to be active and to look into the underlying fundamentals of the company. Because even though, you have a big sector sell-off like healthcare, for example, within the healthcare sector, there are pockets that would benefit from the structural tailwind that China is going through right now in terms of the regulatory change. And therefore, the key is to really go deep down into the stock, be discerning, be nuanced about how the stock will be impacted fundamentally, and also take a look at the valuation. And ESG is extremely important because a lot of regulatory crackdown by China has to do with uplifting the ESG standards for the industry as well as for the companies.
Pruska, does a possible debt crisis in China, even if it is contained, does it change the path of the economic recovery and therefore the path of policy normalisation for other central banks?
I I think if you look at China versus other central banks in Asia, they are on a different path of policy normalization. So as we have known, for the most part of what we have seen today, year to date, China has been on a tightening path and has already started to normalize policies. So China, you can say that they are ahead of the curve from a monetary normalization sense, but the rest of Asia has yet to start on that path, with the exception of the Korean Central Bank, for example. And I think as we start to see the Fed increase rates and start to taper much later on, we should see central banks in Asia moving in the same direction, but we are not there yet. And inflation pressure in Asia is manageable, and therefore I think as we start to roll out vaccines, as economic activity resumes, what the central bank is trying to do is to really support economic growth. So I don't think policy normalization for the rest of Asia is on the cards at the moment.